Let's say that I wanted to create a non-sovereign store of value. I have $1 million. I want to save it for 100 years, and I don't want to trust anybody else with the money. I can't put it in a bank. Every single person in Argentina had 90% of their US dollars and their Argentine pesos seized overnight by the government 20 years ago by edict. Stroke of a pen. It wasn't hard. So I can't leave it in a bank. I can't store it in a currency because the banks can steal it from me. I can't save it in a stock. The company might not even exist, and the CEO or the board might dilute it. I can't put it in land because I can't move the land, and they could tax in Florida. They tax you 2% a year on the land. You lose your land in 20 years. So I buy gold. Now that's the traditional idea, but the problem with gold is that every year gold miners produce 2% more gold, and then I can't carry $1 billion of gold through an airport, so I have to put it in a bank. And then 95 of the top 100 cities in the world, 95 or more of them seized all your gold in the past 100 years when the regime changes. Okay, so how do I fix that? So this guy Satoshi invented digital gold on an open protocol monetary network, and we call that Bitcoin. And the way it works is I define 21 million gold coins. I dematerialize them in cyberspace. I make them infinitely divisible by 100 million units each, and that's called a Satoshi. Then I make it impossible to ever make any more than 21 million. And then I give you a protocol where any computer can send the coin or the Bitcoin to any other computer without a middleman. And I make it possible for you to take personal custody of your asset. So if I want $1 billion worth of property, I can carry it around in my head by memorizing the passphrase. I can hold it on a hardware wallet. I can hold it on a mobile phone. I can put it to any computer in the world. Then I can move the $1 billion to any custodian in the world in a few minutes for a pittance. So the idea is, if I took gold and I said, you can't mine any more gold, check, that would make gold more valuable. And if I said, you can't use it for jewelry, there's no jewelry being melted down into gold, that makes gold more valuable. And if I capped it at 21 million and I numbered each of the gold coins, that'd make it more valuable. And if I made it infinitely divisible, and if you could authenticate it in a split second with a mobile phone, that would make it more valuable. And if I made it programmable with a protocol, and I made it possible for a computer to make 1 million transactions a second and talk to 100 million other computers using Intel semiconductors, that would make it more valuable. So in essence, we created programmable gold on a network. And then what's the last twist? The last twist is you make it decentralized so that there's 10,000 different computers, or maybe even 100,000 different computers running the software at the same time with an identical copy of the ledger, so that no company, no CEO, no government, no regulator can meddle with it, the protocol. So it is literally, it's like a virus released into cyberspace, a living life form. You can't stop it without turning off every computer on Earth at the same time, and you have to keep them turned off forever, right? You can't kill it. And so the idea of Bitcoin is apex property for the human race. And for the first time in the history of the human race, if you have $1 million, you can hold $1 million in your head, walk through a border, send it across the world, take custody, or transfer it to any custodian, or prove that you have it in a split second. And you can't do that with anything else. That's what Bitcoin is. If the US dollar is losing 20% of its purchasing power a year, which is what's happening right now, the dollar is collapsing against scarce assets. The reason the NASDAQ or the stock exchange is an all-time high isn't because the companies are more valuable, it's because your currency is weak. And the currency keeps collapsing against scarce assets. That's why we have inflation. That's why houses in the Hamptons or Palm Beach cost more. That's why the average home in the US costs 15% more than it did 12 months ago. So if El Salvador is going to prosper as a country, they need to invest their assets or invest their money in something which isn't going to collapse. If you're holding $1 billion of US dollars, and if the US Fed doubles the dollar supply, they stole half your money from you. If you are wealthy in the US and Europe and you have a large stock portfolio, you think you're a genius because your portfolio is up 32% or 47% year over year and you made wise investment decisions, right? And then you think, oh yeah, I see that everything's going up in price, but you've already got your house, right? If you were trying to buy a house in the Hamptons, it went up in price 45% year over year. If you already own the house in the Hamptons, you think, well, this is great. My house is more valuable. My stocks are more valuable. I'm a genius. I'm a good investor. And so if you're asset rich, and that's 10% of the world, you just feel like everything's great. On the other hand, if you're a dentist working for $137,000 a year, the price of early retirement and the price of all those things you ever wanted to buy is pulling away from you, right? You can't afford to buy. There's something wrong when people say we're going to pump up the price of assets to protect the economy, because what you're doing is you're inflating the price of assets for everyone that works for a living that wanted to buy those things. And so people don't understand it, because either they're wealthy and they're beneficiaries of loose monetary policy, right? Or I think that's the number one reason. Or they're stuck in they're stuck in a frame of reference. If you have a strong ego, it's like if I take you to the top of a cliff and I kick you off the cliff and you're humble, you would look and you see, oh, that mountain is like zooming up really fast. That's not a bubble. I'm falling, right? But if you have a strong ego, you think, oh, the mountain seems to be like going up really fast. It's a bubble. It's got to eventually come back. And it's just, and the issue is it's not coming back. You're going to smack into the earth because you're falling. So, I guess the best example is most Americans can't imagine their currency weakening. They're arrogant about it. If you go to Argentina, the currency weakened from 1 peso to the dollar to 155 pesos to the dollar over 20 years. You lost 99.5% of all your wealth because everything's going up in pesos. Are you getting richer, or is the peso collapsing? So I think people in Zimbabwe, Venezuela, and Argentina, they get it. They understand that if the currency is collapsing, your stocks aren't getting more valuable. Americans can't conceive of American currency weakening. And so if you're stuck in the American mindset, let me just give you one more metaphor. Like, I'm sucking the oxygen out of the air. If I inflate the currency by 10%, I sucked 10% of the energy out of your dollar. When I inflate the currency by 100%, I sucked half the energy out of the dollar. I'm marching you up Mount Everest. The oxygen is disappearing. You're going to get hypoxia. Eventually, if I suck all the oxygen out of the currency, the economy collapses. And that's what happens in hyperinflation. When the currency collapses, it's like your blood doesn't carry oxygen, and the entire economy is ripped back to Stone Age barter.